Welcome to FinTech Insider Interviews. Today I've got Ricky Knox, the CEO of Tandem, and a FinTech legend, having founded both Small World Financial Services and Osmo. So I guess that's quite a journey, Ricky. You know, you've been in financial services in FinTech for quite a while. Can you talk to us a little bit about that, where you've come from?
Sure. So, I mean, my FinTech journey begins well before it was called FinTech, in that I started off my entrepreneurial journey started a telecoms business called GSM Systems, and built up a business that was bringing some of the first mobile networks to Africa and to the developing world by recycling telecoms equipment. So my sort of weird blend of stuff is I've always been interested in tech. I was a VC before and investing in sort of disruptive tech, and like to do things that I can get out of bed in the morning feeling proud of what I do. So got really turned on by the sort of development angle there on that business. The next business I did was actually my first FinTech business, was pre-Small World, was something called Clarity FX, which was a foreign exchange software business. It was basically trying to stop the banks ripping people off on foreign exchange. So we built a piece of software that could identify, you know, what margins the bank were charging to their clients and save people loads of money. And that I was lucky, and we sold that actually 14 months after we founded it for a fair amount of money, which was timing and sort of happenstance, which is often an important part of things. We actually I was at a FinTech dinner last night where we had a guy who was a football statistician who his Danish team sort of came fifth in the European League or whatever, because basically they play the stats, and his point is football's a game of luck, not of skill, because it's low scoring. And so statistically, you know, and his lesson for entrepreneurs was, you know, you've got to be lucky. It's not just about how good you are, i.e. when things are going really well, don't go, I'm not going to change anything, because you're probably doing well because you're lucky, not because you're a genius. Which was a good message, I thought, for the FinTech audience there in the room at the time. But anyway, I was very lucky with the first one. That enabled me to, gave me an exit and enabled me to start a small fund, Hexagon Partners, which basically invests in early stage FinTech stuff. And from Hexagon Partners, we were looking around, figuring out what we wanted to do around something in financial services and technology, which at the time, you know, we defined as sort of technology disruption in retail financial services. Our theory was things were getting disintermediated around the edge. Technology is going to play a really important role. And we wanted somewhere where we could make an impact as well, so social impact. So remittances came up as an interesting area to have a look at, and I can truthfully say I knew absolutely nothing about remittances. I now, having invested sort of 10 years of my life, know quite a lot about the sector. So our very simple thesis was regulation sweeping through this sector. Technology is going to make it much easier to send money around the world. So let's go in and buy a load of remittance companies, put them on a new platform, make it a hell of a lot easier, and hopefully make it a lot cheaper for people to send money. That was a little bit harder than it sounded when we sort of decided to set it up, and we learned an awful lot.
And what's your kind of motivation there? Because I guess, you know, a lot of people listening or watching might think, hey, if I had a big exit, I'd be lying on a beach somewhere, or I'd be, you know, off doing stuff. If you don't have to, you know, to create that stuff, if you don't have to take on those challenges, what led you there?
Well, it did take a break first, but first he said, but you know, and I think also we were in a situation where, you know, we had a pot of capital that was, you know, also reasonably early in my career, you know, exciting to go out and do something with that. And so having built Small World, we then, in 2000, so we actually started sort of Hexagon and then Small World in 2005, which, as I said, was sort of pre the coining of FinTech as a term. Then we, in 2010, we sold a large chunk of it to a private equity house. I exited the business, one of the other founders, Michael. And we actually initially thought we're going to go and do a completely different business. We want to found something else and do something fun around this area. And when we came back to it, it was like, look, we've constructively spent 7 years learning all about this industry. And all we'd really done was taken it from from agent-based to direct. We had one of the largest direct businesses in the world that was sending about $5 billion a year of remittances, but it was primarily over the phone, a bit on the internet, nothing on mobile. And we were like, well, it's definitely going. And actually, we saw a US player, Zoom, which had been in the wilderness basically since 1998 when it was founded, and in 1994, I think, where there was just no tech adoption. The adoption curve hadn't hit it yet. And suddenly it was taking off, and so we were like, we really should go and do this thing in remittances a little bit longer. Be able to bring the price down further, because we could get about 3%, but when you're running a call center, you can't really get it down to 1% or 0.5%. It's just the cost base per transaction is too high. So let's do this properly, mobile first. Go out there and build a really slick set of remittance rails.
And this is Osmo.
This was Osmo. So we built Osmo. Built the tech platform from scratch, which was thorny but fun, and now Osmo is one of and the funny thing is, actually, when we started the small world, remittances were really sexy. There was loads of M&A in the sector. Then it got deeply, deeply unsexy, and everyone really hated the sector for a while. And then by the time we got back around to Osmo, suddenly remittances was sexy and interesting again. And you see Remitly just raised a load of money. We were in part responsible for the money that was raised by one of our competitors. We went to Excel when we were like totally pre-seed and said, look, we think this remittance thing's really cool. And they said, that's awesome, what's your revenue? And we're like, well, about £2,000 last month. and they were like, yeah, it's a little early. Is there anybody else in your sector? And so we were like, well, this guy Ishmael sort of kicking off. He's still pretty small, but he's at about $1 million of revenue. We'd actually tried to buy Ishmael's business when we were at Small World. And 2 months later, it was announced that Excel had invested £40 million into Ishmael's business.
So what do you think about the remittance sector now? Because obviously you've got a number of larger players. You've got a lot of people fighting for the big corridors. You've got Western Union, the big dog in the room. Like, where's that going as a sector?
Yeah, I think we at Osmo, what we've been brewing up, and this is, I don't want to careful to make it a world exclusive here on your fintech podcast, but essentially, it's like nearly 3 years ago, Facebook approached Osmo and approached Mike and I to offer Mike the role of sort of head of financial services at Facebook, and said that they saw the future being instant sort of peer-to-peer remittances over their Facebook network. We definitely saw that opportunity at the time, and think that's really big. I think one of the challenges for us was Facebook really didn't understand. It's a very one sector company run by guys when they were working sector, and it was we spent some time with Mark Zuckerberg, and it was really, really clear that he was sort of dismissing all the stuff that was gonna make this hard, and saying, look, you guys should deliver in no time, and you'll have this done in 4 months. And we were saying, So.
And what was that like, working with Mark Zuckerberg?
It was pretty interesting. I mean, it was Mike who did the workshop with Mark. So you'd have to ask him. But no, he said he was actually pretty modest about stuff, but he did have a very sort of clear view, which wasn't very well informed by knowledge of the sector in this case. So they launched probably a year. They said they were going to launch the whole thing by that July, September. We ended up turning them down on the investment, but then they did. They did actually about a year and a half, 2 years later, launch domestic U.S. remittances. Sure. So pay via Facebook. They've just announced, although they haven't done it yet, that they're going to do this internationally as well.
Yeah, I've seen the banking license, or the license.
Yeah, they had an e-money license in Ireland. But I think that's certainly the direction we think things are going next. It's actually something we're doing at Tandem as well, but really just taking the friction out of the process, making it much more one-click, mobile number-based. So it's just a lot easier to, rather than having an extensive setup process for each beneficiary, the person who receives the money, the guy at the other end, receives it into a wallet, can put it into his account if he wants to or not, and it just makes all that takes a lot of the friction out of the process.
So do you think a lot of that payments or remittance will really move to the WhatsApp, Facebook, kind of where people are, where they're interacting?
Yeah, I don't know whether it actually will move into and onto those platforms, but I think if you look at what WeChat have done with the red envelope service, I think that it will become as easy as that to remit money. I think red envelope's really quite indicative because it really took off because as micropayments, more as a game, but due to its gamification, the gambling angle, than it did because people wanted to use it as a way to pay from one person to another. Venmo, on the flip side, which is a specific network just for sending money, has been a massive success and really has cracked the peer-to-peer thing. On the flip side, hasn't cracked monetization because it's got no international element. I think the international Venmo, which is really where we want to take Osmo next, is an exciting next evolution in that market. I think there's a lot of chat about blockchain. I'm not sure in what is essentially a frictionless foreign exchange market, what role, and by the way, very high volume and very high trade volume isn't actually best suited to blockchain as a mode of neutral transfer. Ripple are obviously working on that with their own coin, but I think blockchain is super important, definitely a seminal technological shift for us, but I'm not sure that it's as relevant as people think it is to remittances. Where I do feel that there is another big shift to be taken in terms of the technology. Zoom, even Remitly and the other guys out there, it's really internet money transfer businesses. They may have a mobile front end, but the paradigm is very much not a social one. So I think there's a next step to go there, and we'll see whether Facebook ends up owning it or whether in fact other people end up trying to buy their own. Snapchat wants its own money transfer, and we end up partnering with them. So we'll see.
So it seems like there's a long journey still to go there. There's all kinds of interesting things on remittances. What led you to found Tandem?
When I stepped away from Osmo, actually had promised my family, back to your beach question, a little bit of time on the beach. We went to Bali for a year. Well, it was meant to be 3 months, ended up being a year and a half. And when I was out there, I was kind of thinking, I'd love to start another thing, but I've done quite a lot of things, and so I want it to be something big and more like, my,
legacy.
Yeah, my legacy sounds really wanky, doesn't it? But yeah, something large, impactful, that has social impact, that is able to, actually transform a decent number of people's lives, and it keeps me busy for 5 or 10 years, not something I get bored of after 2 years, which is one of my failings. We'd been working around fintech, and with Hexing we'd invested in a load of different stuff around the edges of financial services, and it just felt like banking was so broken in the middle, and that particularly the sort of the morals and ethics of banking, which sits in such an important and sort of pivotal role in people's lives, wasn't being conducted in the right way. Sort of in a way, banking of old had had this sort of patrician feel to it, where while it was incredibly difficult, didn't work very well, you felt like the banker sitting in your local branch really sort of had your best interests at heart. He actually knew the community, and what has happened in the sort of, I won't even say, because to even call it a technological disruption would be a bit rude to technological disruption itself, but in the process of moving away from that manual and personal relationship to cut costs essentially for the banks, they lost any of those, a lot of those values, which were about actually looking after the customer, and instead, they still had some trust from the customer in terms of the trust that belongs to, that comes with large stone buildings and not losing their money. Sure. They'd really lost the trust that these guys were actually out for me in any way at all, very much just out for the bank. So felt that there was a place there for, and we sort of call it a good bank, and when we set it out, felt there was a place for a bank that genuinely was trying to do the right thing for customers, trying to improve their lives rather than maximize profit. And there's been a big backlash, I think, socially, and it's interesting because I think it wasn't intentional, but I think there's a generation that's growing up now that's really questioning some of the, the system works this way and it's just how it goes, and it's totally cool that the bankers really want massive bonuses and that's all that motivates them. That's just what people in banks do, and really starting to say, well, actually, no, this thing should be looking out for me and have my back and helping me out. I should be able to trust my bank to recommend the right thing, especially since money is incredibly complex. When I go to my doctor, I don't expect my doctor to, do open heart surgery because he's going to get the 900 quid versus the 20p you'll get for the pack of Strepsils. I expect him to actually exercise his Hippocratic oath and say, Ricky, you're fucking fine, stop moaning. And so we really felt that there was sort of room for almost a sort of Hippocratic set of morals around banking. So
how does that sort of, I get the values and I get the the change from the mechanized mass market, here's your statement, and we're going to try and sell you some more stuff. But how is that voiced? What does that mean in terms of then the products and services that you release? Because I guess we've seen some people look to focus on saving people money, getting discounts, group buying, other people on sort of intelligent financial services stuff and helping people get from payday to payday. There's a variety of ways you could take it, I guess. Where's Tandem going?
So I suppose if you were to take as a principle that what we're building is a purpose-driven, purpose-led organization, then the question is, if you could trust your bank and they were doing the right thing by you every time, what would you want your bank to do for you? And it comes back to, the piece around, the way that a whole load of industries have transformed, which is that there is a lot of friction in every step of a financial services journey. And when you look at it with detail, and everybody says this, nobody wants to buy a financial services product. It's utterly uninteresting. This is actually something that should be a facility that takes place in the background that you never have to even interact with. And if you trusted somebody absolutely with your financial services, you could have a facility that just provided the loan when you needed it, checked it was affordable with your income, put it in, moved it away when, put some money aside when it knew an event was coming up, or even just when you had extra money. All those things could actually be completely automated. And in fact, with data and modern systems, that's really easy. We would like to, we see a day in the not that distant future when you don't really, you trust your bank, and therefore you don't really interact with your financial services. You don't buy products, you don't choose a product, you don't have that moment when you go, is it credit card? Can I be asked to get a personal loan for this? Or do I get car finance or just stick on the credit card? All those stupid decisions which really require a spreadsheet and at least an A-level in math, as we said in our recent press release, shouldn't actually, there shouldn't be things that you're being taxed with. Like, sure. You should be out doing what you enjoy, and enjoying your life. So I think, certainly, and I think people are making baby steps in this direction, but we really want to build, banking as a service or banking as a solution in the same way that, I now listen to Spotify. And my music experience, I don't have a buying experience anymore, which I actually hated anyway because I was bad at CD shops. I didn't enjoy browsing record stores. Music choosing that led me to get my CD stuck in the CD player for 6 months because I found it difficult to tell which which CD did I want? I kind of, until I heard it, I didn't really know. And I certainly couldn't be bothered to get 12 out and try each one. So, that experience has gone from one that was painful in a number of areas and to one where I now have, with Honest and Spotify, kind of music in every room, and there's radio going on, and it should feel a little bit like that to do your banking. It shouldn't be any effort, and be not quite as joyful as listening to Spotify, but it should be a lot more akin to that.
So where do you think the sort of aggregation of that experience happens? Because a lot of people have spoken about the disaggregation of financial services. Osmo comes along and pulls out a little piece, Betterment, Moneybox. There are lots of people, I guess, who are looking to currently isolating specific journeys. And I guess with PSD2 and open banking coming along, there's also the opportunity for third-party aggregators and everything else to happen. Where does Tandem fit in that? Are you a monoline bank, a bank that has a full suite of products? Do you fit into other services and plug other pieces in? What's the future hold?
So we believe in the reaggregation of banking, and if you look at disruption cycles, so look at here's a great one, retail. I mean, 20 years ago, and actually I was a good friend, or even 10 years ago, who had made a load of money on U-Switch, actually, ironically, on the aggregation side, and built a super successful group of retail sites that were like rabbithutch.com and other stuff, each one of them having sales of £1 million, but he had 5,000 of them, and actually he was making a hell of a lot of money because, internet retail was really going to the long tail. You look at where internet retail is today, it's not in the freaking long tail, so, hey, you're gonna disaggregate retail. Yeah, sure. Amazon's really disaggregating the hell out of retail. And it is at some level because but actually what's happened here is you had disaggregation, you had marketplaces sort of heading this way, and then what you've seen is this reaggregation trend where actually people can't be arsed. And this is the key. There's a layer of trust, there's a veneer of trust, which is, by the way, the banking license is super important in, and then there's access to your own and other people's products, but under an easy buying process where you've taken out the layers of hassle in between, for the customer, and to some extent you're managing service quality for those, for those in Amazon's case, for those retailers. Sure. So you have the appearance of choice, and really do have choice in terms of product catalog, because there's no way Amazon would stock all this stuff that's in Amazon Marketplace. And yet you've got one provider who you go to and does all of it for you, and oh my God, such a large percentage of the world go to the same retailer who does it all for you. So I think that we'll see a similar pattern in financial services. I think the drivers are much stronger. I take less enjoyment in buying financial services than I do in buying retail stuff, which drives to reaggregation. If I really enjoyed buying every single one, even records, you probably got some record fans here who like spending all day looking at vinyl. There are so few people who love looking at different financial services products. Give me a room, bank branch full of financial services brochures, and find me 10 people in the UK who want to hang out there and browse through them all day. You're going to really struggle. So, I think the forces are much greater there for reaggregation than disaggregation. I mean, you think about, I found myself in a position about 4 years ago where I reaggregated personally and put everything with banks that will remain nameless. But I had a whole lot of loans on Zopa, I had investments over here. I probably had 23 financial services providers. And what I realized is that I'd actually lost the contact details, that, even any record of I had 2 ISAs that I literally didn't know existed. And when I went back to my files, I realized they were there, and I was like, this is a bit messed up. It's not like I've got that much money to be, spreading my stuff around, and I'm giving myself basically a full-time job to look after all this stuff. And I don't enjoy that job. So sure. Why would I want to do that? So now, unfortunately, so I opted to pay 15 times as much and earn half the return on my investments just to get it in one place. So I could see it on one, sadly, piece of paper right now. They can't even give it to me in one digital interface. But, and I genuinely believe that for most people, particularly people who don't have that much investable income, or investable assets, they just want simplicity. They don't want a disaggregated world where they've gotten absolutely the latest basis points deal on this, that, and the other. Sure. They want one place, but they want one place where they can have choice, and they can have the opportunity to go and look at the market and check they're getting a good deal. But on the other hand, to have really easy, hassle-free journeys curated for them in their place. So that's what Tandem will be.
But I guess that the challenge there for the platform play, I mean, it took a year for Apple to launch the App Store after the iPhone. It was 7 years before Facebook Connect came out. There's always this, question of driving. It's a two-sided marketplace. On one hand, people want to put things on a platform where there's millions of customers. On the other hand, you need millions of customers. You need products already integrated in order to draw the customers in. So where do you focus on to start off with?
You focus on having, on the basis that the convenience is more important than the price to most people. You start off by having at least one product in each category, whether it's your own or other people's, that works really well, and having a slightly more effortful access to a broader selection of products. So that's what we'll do at Tandem. You can see whole of market, but it won't be. We're not making whole of market easy for you. Sure. But we will try in every category to integrate something into the financial services journey. Because what we're really talking about is not, is about making that whole journey through your life, through that life event that you're, and I don't mean marriage, those are the, buying a house ones that the Barclays thinks about, but the day-to-day events, the end of the month, the wife's birthday, the holiday that you've got, making those events easy from a financial services journey perspective, totally effortless, and kind of almost you can switch on autopilot when you trust us enough, and we'll just manage the whole thing for you.
So where's Tandem in that journey? Obviously, you've got your banking license. You're through, mobilization. You're, there. When can I sign up?
You can. Well, you can sign up as a co-founder now. We sort of launched into co-founders in October with that selection of products, which answers your product question, and we are improving the app. We'll release it to the public when it's ready, but definitely in the first half of this year.
Well, that's great. So the co-founder thing, I love. Talk us through the kind of co-founder crowdfunding thing. How has that worked? Is that I guess it aligns well with the values. Is that something you're going to be continuing?
It's, co-founder thing, I think has worked super well for us. Also, frankly, getting a load of enthusiasts who are excited about the business. Both, and interesting when you look at because all of our crowdfunders had to be co-founders in order to do the crowdfunding. Okay. So those people basically have formed. There are a couple of super engaged group in our overall co-founder base. One is some of the crowdfunders who tend to do a lot more of the sort of interacting. We've got a social hub where they go in, a social media community where they go in and comment on stuff and see the latest screens in our app and see everything that's going on. And so those guys, a lot of the crowdfunding guys engage a lot that way. And then there's another group who engage more physically, come to our events, come to these break it breakfasts, come to our evening events and do that stuff. So there's sort of two very engaged groups who behave quite differently in terms of the way they engage with us, but both of them are equally valuable.
I guess the biggest piece I've seen about you guys recently has been the House of Fraser investment, which made me stand back and go, House of Fraser? Would I put that brand with Tandem?
Yeah.
Wow. So I'm fascinated to hear from you how that came about. What's that about? How do they align? How does House of Fraser align with Tandem?
Yeah, so I mean, first of all, say we're super excited about this. Obviously, we wouldn't have done it if we weren't excited about it. It does a couple different things for us. I mean, when you look at the routes other people have taken, if you look at Adam's route, they've taken on a large bank. That was something we had, sort of some issues with internally. Didn't feel like a good match for what we're trying to do. Interestingly, retailers in general, but House of Fraser in particular, actually has a really strong set of values around, of course, retailers always put the customer first and take that incredibly seriously. You'd struggle to find a board meeting where they're not totally obsessing about customers. You'd struggle to find a bank board meeting where they mention a customer. So I think there's a piece there, and you look at actually their integrity and the other things that they've got, in terms of their core values. There's actually a lot that align very closely with our value set. So I think that was an important piece of it for us. But at a very high level, we're a new business into the market. House of Fraser genuinely want to do a better job for their customers. They want to engage more, but they also want, the idea of Tandem is that we're actually going to help our customers, and they're going to be better off, and their money's going to be better managed, and their lives are going to be easier, and they're going to be happier at the end of the day. And that's something that House of Fraser genuinely have on right up the top of their list is what they want to do to their customers. They also would love them to come to the store a little more often, because House of Fraser is a treat store. It's like your Harrods if you're in a city that doesn't have a Harrods, and they're in 50 largest cities in the UK, so it has relatively infrequent visits from its customers compared to your grocery store or whatever it may be, and so they're keen to increase engagement and frankly make their customers better off, and so they happen to have very high footfall, a couple of million loyal customers who are actually on their loyalty program. Nearly 500,000 people have a House of Fraser credit card in their pocket. And we have very few customers, a great product, great ability to do human-centered design and produce things that are beautiful and really easy to use for our customers. There was a really nice marriage there of a lot of potential customers for Tandem, who doesn't have that many right now, and a great service that can meet the needs around helping their customers for House of Fraser. I think prior to having some discussions with them and some partnership discussions, they've been going on for a year or so, I wouldn't have connected really the way that House of Fraser feels internally and their values with their external brand. I mean, it's kind of a brand that's been around for a long time. I was aware of that, And
I guess that was my question, the kind of demographic overlap, the digital banking meets, because I probably unfairly, I see it as like an older person's store or something like that. That's probably
to
very
some extent,
unfair.
every store is older person's, but but I think there is, first of all, their demographic is not that much older than our demographic, and also they're keen to move their demographic and penetrate a younger demographic, as any long-lived business is trying to do at all times. I think there's also a piece where when you look at Tandem and when we sort of get cast with the millennial bucket quite often, both Matt and I are sort of statistics trained and much more interested in much smaller segments than 30 to 35-year-olds. That doesn't have enough commonality to either be a reason to actually make that an easy group to communicate with, or B, to design product around, or so we have much more of a behavioral cut in how we assess our customers, and that behavioral cut ends up with a sort of age, almost a sort of chi-squared if you're feeling geeky, rather than a normal distribution. And the chi-squared probably peaks somewhere around 35, but and actually tails off very rapidly at the beginning because actually managing your finances on an automated basis is not very exciting when you're 17 years old. And so actually does match better than you might think. We still have people up in the 75 plus, who we deem to be, tech savvy enough, on the right platforms, and interested enough and with the right behaviors to be potential customers. So, I think anybody's oversimplifying and a little bit in 1985 marketing speak when they say that they're targeting a particular age range. There's not very good at marketing, maybe. I don't know.
Well, before I let you go, I'd love to hear a little bit more about your team. I mean, I guess one of the things that you hear that digital banks often offer as in that business case and pitch to investors is the fact that there's a much lower cost base compared to a traditional bank. How many people do you have? What are the plans for that?
Yeah, so one level will always have a much lower cost base than a traditional bank. I don't think that's a primary driver for our success, but it is, I've definitely seen that in pitch decks for other people. That's not, wouldn't be something I'd major on. It's more about growth than cost. Although it's a story that might resonate for an old school banker. I think so we've got, our team is a real mix of people who've never been in banking with a tech background, people who've been in fintech but never gone anywhere near banking, and some, really experienced bankers. And we think that combination is super important. I did say, as you mentioned before in an interview, that I genuinely believe if you're going to reinvent an industry, you have to understand it first. So I think when I was 26, I would have told you that I knew everything, and therefore, what the hell extra could I possibly learn? I don't believe that anymore. I think people have an enormous amount of experience and a lot of stuff to add. We've built a team which combines, as we see it, sort of the best of fintech and tech with the best of banking. It's been super hard. We've had to search for a needle in a haystack to find a bankers with the right values, bankers with enough of a tech orientation, but we think that we found those guys, and so we're pretty happy with where we've got to.
Well, thanks. I guess we should end with you signposting people to where they can find out more about Tandem, can sign up, can become a co-founder.
Yeah, absolutely. If you go to Tandem's website, tandem.co.uk, and I probably shouldn't say this, but it's a podcast. So if you want to use my referral code, which is QK740, get in there and sign yourself up.
QK740, there you go. Well, thanks, Ricky.
Cheers, thanks very much.
And thanks for spending time with us.
Cheers, see you soon.